Since last week, we've been looking at personal budgets, and we will take a look one more time at more detail about a budget. You see one on the screen here. In fact, if you remember from the past few days, we've been looking at a sample budget for John Doe for 2017. Way back last Thursday or Friday, we looked at this part. This is the budget, and we talked about what goes into constructing a budget, in this case for John Doe. Then we had a couple assignments with that. We looked at the budget itself, we looked at what happened after 3 months, and now this one shows the entire year. You'll see in all of the columns for all of the months a number of amounts of money that we will take a look at here in just a moment. But if you remember back, I think on the 16th of February, we had a video and I explained to you what goes into the monthly budget, and I talked about cells, how to determine cells and formulas. If you need a little review, it may be good to go back to that video. But we did say that we start with the beginning of the year. In this case, for John Doe, we started January 1st, and we're looking at 2017. And remember, we look at monthly income. So when he puts together his budget, he doesn't look at gross income. He looks at net income or take-home pay. So this is after you subtract all of the deductions for federal and state income tax, the other deductions that you have for pension or whatever it might be. That number that is actually take-home pay is what we use. So John Doe has two jobs, two part-time jobs. One pays $900 a month. That's net pay again. That's how much he takes home every month from job one. Job two pays $465. So his total monthly net income is $1,365. Then he determines a number of expenses that he has. And you see those listed there. And he determines that he has to make a car payment of $350 a month. He's guessing on gasoline. He thinks he'll spend around $100 a month for gasoline. We'll see how that works out. He's got school supplies. He's got a computer payment. He's got to make cell phone entertainment and so on. Okay. Then John is pretty smart because he decides part of the money that he makes is going to go to savings. So he opens a savings account in a bank or a credit union, and he decides on a number of categories. So he's going to decide on these items to save. So $20 a month for gifts, $125 for car insurance. Now that apparently is not a monthly expense. If his car insurance is paid every month, he would list it under monthly expenses. But in most cases, car insurance is paid every 6 months or maybe even annually. So he determines that he needs to put aside in savings $125 every month so that when that premium for car insurance comes at the end of 6 months or at the end of the year, he's got enough money to take out of savings and pay the bill. So he determines that, and car repair and maintenance, he's thinking that those kind of things come up, so you better save ahead. So all of these things are there. What is not there, and what John ought to be thinking about if he's a junior or a senior in high school, is adding a category in here someplace for college savings. He may have to take out one of these things, or maybe he needs to think about reducing something like, well, I don't know, maybe entertainment. Let's put that back to 100 and maybe put 50 in here for savings someplace in this area of the budget. Just one point with that, as you look ahead to college, a lot of you already know this. It would be great to get a scholarship, and if you have great grades and are a wonderful athlete, maybe you can count on a scholarship to pay for part of your college tuition. So that's one thing. Most people end up taking out a loan for college. Some parents and grandparents are able to help out and pay some toward college. And many college students have jobs during their 4 years in college to help pay for that tuition. But the other thing you can do, it's going to be very helpful if you can do it, is to put some money in your monthly savings for college. So John Doe ought to think about trying to do that every month, because it'll help him have a little bit of an amount of money saved ahead for college. Okay. Okay, now let's look at all of these numbers from January all the way through to December. All of those months. There are a lot of numbers in there. One of the things that the video said earlier last week was that budgets should be re-examined periodically. Maybe monthly is a bit too quick to do that, but at least periodically during the year, it would be good to re-examine where your budget is. For example, if you look at John Doe's income here, from January through May, it's been very consistent. He gets exactly the same amount every month. But you see, during the summer, things change. His one job went up. He got a chance, or will have a chance to put in more hours, and so he makes more money, $1,400 a month. But the other job stopped. He made no money. The net effect was an increase. So what he may want to do at the end of May, if he knows that's going to happen, is to change these two numbers. So if he changes part-time job 1 at the end of May and puts in 1,400, and he changes part-time job 2 to 0 because he doesn't have that job, the net effect is he has an income of 1,400. And I want to point out at the very, very bottom, this line way at the bottom now, the total net income that minus the total outgo, meaning minus expenses and savings, is now $35. So he's got a little bit of extra money. So he could put that into savings. He could put that into some other expense category. If he ends up spending more money than he thinks in gasoline, maybe he needs that $35 for gas. But he's got $35 more during the 3 months. Then in September, look what happens. He goes back to both jobs. Fewer hours probably in job number 1, and that's reflected in the pay. And job number 2 comes back with a little bit of an increase, so he ends up with $13.95. So he can change those numbers back to reflect the September amounts. Okay, so that's where you need to start adjusting. But let's get these back to where they were at the very beginning for now. So we're back to the 1365. Okay, so what else has changed during the year? Well, one of the things is down here with the computer payment. You see that each month he was very good about making his payment for his computer until the month of October. I think you had this question in an assignment. Probably what happened there, hopefully what happened, is he paid the computer off. He now owns it. He doesn't owe any more money for it. So in October, in November, and December, there are no payments because the computer now belongs to him. So that has an effect. If nothing else changes in his budget for October, you'll see that he should have another $120. Well, some things went up. He paid more money, for example, for gasoline than he had budgeted. 115, 54, he budgeted 100. But the net effect at the very, very bottom, way down here, is that he ends up with extra money. And again, that could go into savings, or that could go to pay off another expense that's come up. But it's always a good idea to, first of all, to think, if I now have extra money, if I can save it, I should, because it's always a wise idea to try to do that. So that has changed, okay? Way up here in the car payment, you see that he budgeted $350 a month, and he was very good about making that car payment every month, $350 straight across. So he was very good about that. This will tell him that for the month, for the year, he paid $4,200. This entire column consists of formulas. Every single number is a formula. And if you look at the one for car payment, and you look at the very top of the page, way up here, you see the formula, the sum of E13 through P13. So line 13 for the car payment, all the way across the year, from E through P adds up to 4,200. And even more significantly, this is the average. Well, that's what it should be. That's what he paid every month. One of the things I'm going to point out for the computer is that the 1,080 represents what he paid for the year. He paid 120 every month through September, but then he had it paid off. So he didn't pay for all 12 months. This average then only averages January through September for the computer payment, because that's the only months that he had to pay. So that's an advantage of this kind of formula. And if you look at the very top line way up here, it's set up a bit different. This says equal average, and then E16 through P16. So it's the average. So it doesn't average in 3 months that he didn't pay. Now, the next big step is this column. Way over here, average per month. This is the real benefit of having an annual budget. He now can see in every line an average. So he knows how much he averaged as far as net pay for part-time job number 1 and part-time job number 2. But even more importantly, he knows what the average of his expenses were. For example, the $350 means he's going to keep paying $350 until he pays off the car. That's easy enough. But if you look at gasoline, for example, his average for the year is $138.41. Way back in January of 2017, he estimated a budget allotment of $100 a month for gasoline. He actually paid more than that, $138 a month, $138.41. So next year, for 2018, he probably should consider budgeting a bit more. Not only will he perhaps use more gas, obviously gas keeps going up in price anyway, so he needs to think about budgeting more money for that. And other things as well. If some things were higher than normal, then he needs to budget for those. If they were lower than normal, then he could cut down a bit. This, for example, the $100, $120 he averaged for computer payment, he can keep at zero because he now owns the computer. So he'll have $120 to put in another category if he needs it. Down here in savings, you can see what he averaged per month for the entire year. He could keep all those the same or make adjustments as needed, as we talked about. So that's the real advantage. If you do this type of budget, you have annual totals and you also have average per month, which is very helpful when you look at your next budget. Now, one last thing quickly, you could clear out all of these numbers if you want. If you know how Excel works, you can do this pretty easily. If you, for example, would highlight all of those numbers, and way up here at the top, if you see where my cursor is, you can click on Clear, and I would suggest you click Clear Contents. Okay, that would take everything out. So now you see what happened to the totals and the averages. If you decided, no, I made a mistake, I didn't want to do that, then you can come way up at the very top. There's a little back arrow. If you see it where my cursor is way up here, you hit that, and that'll bring everything back. Okay, and now you have the totals, and you also have all the averages as well. So you could do the same thing with lines. You could up here at the very top, you can see that there's a spot where you can delete cells, you can delete rows, you can delete columns, and adjust this as you need to. So what I'm getting at is that you could save, you could delete all the lines. Don't delete the formulas. They would be helpful to keep. But you can change the categories to your jobs if you have one, your expenses, your savings and create your own budget. So there are many ways to do it, but this is one handy way to put together your own personal budget for the year. So that's the end of this lesson, and we'll go on from there.